So in this video, I'm going to be going over how to use AI to do deep research on stocks. This is something that I've been developing this year, and the results have been pretty amazing. I'm going to use Grok for this example and show you how you can use AI to do your own deep research. This has been requested again and again from the subscribers on the channel. So if you have anything particular you want me to make a video about, a particular company that you want me to do a deep dive on, leave a comment below and I'll see if I can make a video about it. So, where to start? You just go to Twitter or x.com and go to Grok, and we'll put in the prompts there. But before we do that, there's one thing we have to take a look at. The first thing we have to do is to find a company that we like and we want to do a deep research on. And we don't want to be using Grok for quantitative research, because we already have Guru Focus, we have QuickFS for that, and we can quickly see if we like the company when it comes to the qualitative side. For example, we can go to my checklist here and we can review the numbers for this company, ANET, which is Arista Networks. And if we go over the fundamentals, we can see they are a pretty strong company, and their evaluation is nothing very crazy. It's EV to free cash flow at 25 and price to free cash flow 28, PE 35. So obviously not within our buy range, but could get there if the stock price goes lower with the Trump tariffs causing a world recession or something like that. So we gotta prepare for that and use the time while we can to do the deep research. Now, there's also one other thing that you don't want to use Grok for, that is the valuation. The valuation methods are pretty simple. You've seen me do it on the channel numerous times. You can do a DCF, like a 10-year DCF, with a discount rate of 10 to 15%, or you can do just a simple free cash flow growth for the next 5 years and then put a reasonable multiple on it. You can go back to, for example, the video that I did last week about evolution, where you see me do some intrinsic valuation calculation. Now that's what we have to do for the quantitative part. Now for the qualitative part, that is the part that usually takes the longest. But by using Grok, we can shorten that time down to maybe 1 or 2 hours. I think less than 1 hour once you have all the prompts ready and you're just copy pasting the same template. But I'm going to show you how to create it from scratch. Now you have to have some kind of structure for Grok, and you have to split it into a couple of parts. And the more parts you split it into, the more precise and more detailed the analysis will be. But you don't want to have it too detailed. You don't want to have it 300 pages, which you'll never read through. It has to be detailed, but not so detailed that you don't want to read through it. So I've decided to split this stock analysis into 4 parts. Part 1 is always going to be business overview. Now you can customize this to your personal investing style. You're not going to have the same items for all investors, because we're different and we look for different things in companies. You could also use Grok to create the structure to begin with. Just be aware that Grok will probably use a lot of Wall Street metrics, which don't really apply to value investing and real fundamental investing. You could see Grok use metrics like stock price volatility, Sortino ratio, and stuff like that. Things that we don't really want to focus on. So I think it's better just to create the overall structure for Grok first and just make it simple and create the template and then just keep adding to it. And once you get more information, something else you want to know about the company, just add to that part and update the stock analysis. So for part 1, I want to keep it simple. I want to have the business overview, which is the business model from the 10K, and use Grok because it goes through the last 10 years, does it really fast, something that would take me a couple of hours. And you look at the last 10 years, how has the business model changed? Same with the revenue sources from the 10K, and also take a look at the KPIs and if they've been changing or not. The first prompt would be something like this. I'm creating a deep dive on a company called Arista Networks. I will split it into 4 parts. The research should be very thorough. Here's what I want for part 1, and just copy paste what you already did for part 1, and below we can see the results. So the business model, it goes very much into details on that, and For me personally, I don't know anything about the company. I've just been interested in them for a while, but haven't really done any deep research. So I would just go ahead and read through all of this, but you can see the quality of the output is very high, and this is just the first prompt. And you can define this like you want to, you can make it more specific. And he goes through here the evolution of the business model, how it was from 2015 to 2017, and the changes up until today, and what they're doing in 2024, where they have become a mature company and a market leader in data center switching, and the company achieving number one market share in data center Ethernet switch ports and revenue, and where they're surpassing Cisco in certain metrics. If we keep on scrolling down, Grok is highlighting the key changes in the business model, going from hardware centric to software and services, which is good, expanding their markets and diversifying their customers. And here Grok is explaining to us their revenue sources, which is product revenue and service revenue. And this is a very handy revenue breakdown from 2015, where we can see the product revenue versus service revenue, and how Arista is going from relying more on product to relying more and more on service, with a split going from 85-15 to 79-21. He also goes over geographic revenue distribution and goes into more detail on the changes in revenue sources. So this is all very valuable information for us, and would take us a long time to summarize if we were going over all of the 10Ks for the last 10 years. And here we can see Grok is highlighting the first risk with the company, customer concentration risk. Reliance on Microsoft and Meta remains a risk, though diversification efforts are underway. So this is the first thing we see as a red flag. But to keep on going, we see the KPIs from the 10K. And we can see them here: revenue growth rate, gross margin, net income and EPS, operating margin, revenue per share growth rate, customer metrics, number of customers and customer concentration, and deferred revenue. But it's very important in this, like with everything else, you always have to double check the information, because Grok can make mistakes, like I can make mistakes, you can make mistakes, any analyst making a report can make mistakes. So especially if you're using this information to make financial decisions, you have to double check, because I've seen Grok make mistakes. So you gotta at least know what you're doing in some sense. But like with me now, I don't know anything about the company. This is just my first prompt and my first view of what the company actually does. I see that they have great financials, but I'm trying to poke holes into the investment thesis to find a reason not to invest in Arista. And here we can see the key performance indicator data going back 10 years. And this is really nice to see, where you can compare kind of how it's been going with the revenue and net income, operating margin, and all of the KPIs that the company likes to track. This is something we would have to go over in detail if we were thinking about investing into the company, which I actually am, but not at these prices. So I got to get everything ready to be able to pull the trigger once the opportunity presents itself. Okay, so we're pretty happy with part one, very detailed, and gives us an insight into the company. Now, part two, I'm gonna name Moat, where we're gonna focus on industry growth, competitors, and have Grok summarize their financials compared to our company, and specifically tell them to use Guru Focus and QuickFS. These are the resources that I trust. I don't want them to use Yahoo Finances or something else. This is where the most reliable information is, and this is what I use personally when I'm evaluating companies. I'm going to ask you to compare market share, market cap, revenue growth, free cash flow growth, return on invested capital, and return on capital employed. Then we're going to have Grok check if the company has any of these modes: low cost producer mode, high switching cost mode, brand mode, regulatory mode, network effect mode, or intangible assets mode. I have a pretty decent idea of what kind of a mode the company does have and doesn't have. But let's see what Grok gives us. And then I have a couple of questions concerning the mode. Is the business exposed to a small number of customer clients or suppliers? we've already seen that it has a high customer concentration. So that's something we have to dig into. Is it easily disrupted by cheap labor, by cheap knockoffs? I don't think so, but let's see what Grok says. Could it be disrupted by low-cost competitor? Like I said, I don't know anything about the company, so maybe they're the premium offering in the business, and there are some other companies that are offering the service at a lower cost. That is something we have to take into account. Do they control the supply chain? How is the supply chain? We have to know that. And is the company delivering strong and consistent organic growth rates, both in revenue and earnings? Are they growing through acquisition? Or are they growing organically by investing into R&D? This is something I like to know. Maybe you don't want to have that included. You want to have something else. Just depends on what you want to know about a company before pulling the trigger. Does the company have a mission critical service product? That one's important. And does the company have strong operating leverage? Meaning if the revenue is growing at 10%, can the company use their operating leverage to make the earnings and the free cash flow grow faster? Now we see that with the best companies in the world, and we want to check if Arista Networks is one of those companies, and how predictable is the business in terms of growth in revenue and free cash flow. Predictability is very important, especially for a value investor that likes to invest in companies and just leave it there and just follow along with the quarterly updates. If the company is very unpredictable, it's a very tough stock to hold. And finally, where is capital being reinvested? Um, and touching on the same thing as before, is the company growing organically or by acquisition? Where's the opportunity for new product lines or growth in existing ones? This prompt is a little bit more detailed than the one we had before. You could make it more simple and then add to it, or you could do it more detailed and expand on these questions that I have. But let's see what Grok gives us. So industry growth, Arista Networks, they're operating in cloud networking and data center switching industry, which is a subset of broader networking equipment market. The TAM is 30 to 40 billion with serviceable addressable market of 80 to 25 billion. The global data center switch market is projected to grow at a CAGR of 5 to 7% through 2030, with high speed Ethernet switch segment growing faster at 10 to 15% CAGR. So that's given us a little bit of an insight into the industry that Arista is operating in. And like we saw before, they achieved the #1 market share in data center Ethernet switch ports and revenue, surpassing Cisco in certain metrics. And we could see the primary competitors here: Cisco Systems, Juniper Networks, Hewlett Packard Enterprise, and Nvidia. Grok is comparing the financials between the four companies here. It's leaving out Nvidia, which is probably the toughest competitor when it comes to comparing financials, but let's leave it as is. And we can see the comparison here. Arista Networks is the market leader in high-speed Ethernet ports, 20 to 25% market share. Cisco has 40 to 45% overall leader, but losing share in high speed, with Juniper and HPE being smaller at 5 to 10% each. We can see the comparison in market cap here. We can see the comparison in revenue and the growth rates. Obviously, Arista is the fastest grower compared to these three, but it's a little tougher compared to Nvidia. And the growth in free cash flow, which is much stronger. Return on invested capital and return on capital employed, obviously much stronger than these three. So just looking at these quickly, we can see that Arista is a much better company. Now, if you want to dig deeper into these competitors, you could ask Grok on separate prompts to go detailed into these three companies and maybe compare Arista to Nvidia when it comes to the competition in data center switching. But for me, personally, I wouldn't go that detailed into it. You can never know everything about a stock when you buy into it. You just got to figure out the most important details, make a decision, buy, and then once you own the stock, you really get to know it. And you dive deeper into the industry, you dive deeper into the competition, and you get to know the company as a shareholder, which is definitely different than being on the outside. because all of a sudden you have skin in the game. And then we can see Grok is making an analysis of the financial comparison to the competitors, where Arista has gained significant share in high-speed data center switching and overtaking Cisco. While Cisco is the leader, they're losing ground to Arista. Juniper and HPE are smaller players. Juniper is focusing on cloud and HPE on campus networking. Next up, let's see how Grok did on the economic moat analysis. They're not a low-cost producer. They are premium priced. Their products are premium priced. Okay. So now we know that they're not competing on price. Arista benefits from high switching cost due to its proprietary extensible operating system EOS and integrated hardware software ecosystem. Once customers adopt EOS, they invest heavily in training, automation scripts, and network configurations tailored to Arista's platform. Okay, that makes sense that they have high switching cost mode. Their brand mode is moderate. Yeah, I could probably agree with that one. It's kind of hard to have a strong brand mode when you're B2B. Regulatory mode is none. Network effect mode is weak. And intangible asset mode, that's strong because they have their EOS, custom ACIC, and robust patent portfolio. So if we summarize, or if Grok summarize for us, the mode strength, they have high switching cost and intangible assets, which I think is a pretty fair assessment. So Grok is probably right on that one. So to answer the questions we had, is the business exposed to a small number of customers, clients, suppliers? Customers, yes, high exposure. And here we can see Microsoft and Meta accounting for 40% of total revenue. That's a lot. This is obviously a risk. They are diversifying their customer base to over 10,000 customers by 2024. Suppliers, that's moderate exposure. They have a limited number of suppliers for critical components, semiconductors, optics. Supply chain disruption has impacted production, and it could very well impact production now that we're seeing Trump's tariff wars against China. They're not easily disrupted by cheap labor. It's not labor intensive. It's high value hardware and software design. Cheap knockoffs, it's unlikely. They could be disrupted by a lower cost competitor. That's moderate risk because they have their premium prices, which makes them vulnerable to low cost competitors in price sensitive markets. They control the supply chain partially. The company is delivering strong and consistent organic growth. Yes, we've seen that. They have a mission critical service product. Their switches, routers, and EOS software are mission critical for hyperscale data centers, AI workloads, and enterprise softwares. So it's good to know you're pretty happy investing in a company that has very mission critical services or products. They have strong operating leverage, and Grok thinks that Arista is moderately predictable in terms of growth in revenue and free cash flow. And predictability rank on Guru Focus is high, so it's good that Grok is checking Guru Focus, and it's reflecting consistent growth, but lumpiness in hyperscaler spending. Microsoft Meta can cause quarterly fluctuation. Okay, that's good to know. Where is capital being reinvested? Is the company growing organically or by acquisition? The company is reinvesting heavily in R&D, which is good to see. Their growth strategy is primarily organic, where they have selective acquisitions to enhance capabilities, where they acquired Awake Security and Pluribus Networks, added cybersecurity and distribute cloud capabilities, but they are small relative to organic R&D investments. Opportunity for new product line or growth in existing ones. Yes, significant opportunity in the existing product lines, data center switching, routing and campus networking, and some new product lines as well. So we could see part 2 very detailed from Grok and looking very good. Of course, we have to double check some numbers before we make a decision, but so far so good. Part 3 is the management team. Now we're going to use Grok to go through the proxy statement. That's very tedious work. It takes a lot of time. So it's very good to be able to use Grok to do that, because also as soon as I go through a proxy statement, I will have forgotten everything. So I want to summarize it and keep it in one place so I can look over it. I might buy into the company 5 years from now. So it's good to have all of the information compiled and we can just update it when we're making the decision to buy. So management give a detailed summary of the company's proxy statement when it comes to management salaries, bonuses, and equity. RSU and PSU, so restricted stock units, performance stock units. We want to know skin in the game. So we want to know how much do the top management team own? Do they have skin in the game? How long have they worked for the company? And what is their experience in the industry? This is something that usually takes a lot of time to summarize as well. So use Grok for that. Go to the 10K and earnings transcript for the company and give me the full year M&A history in a table and how those acquisitions turned out. Did they add value to shareholders or destroy value? Um, Summarizing the M&A history takes a long time as well. We kind of want to see the track record of the management team to see if they're good at acquiring companies. We've already seen that they're mainly focusing on organic growth, which is good. But we also have to look into if the selective acquisitions for Arista have been adding value to shareholders or destroying it. We're going to have Grok go to the 10K and earnings transcript for the company for the last 10 years and go through how the predictions that the management team made and how those predictions turned out. If they said they would do a certain thing, did they follow through or make excuses? This is concerning management integrity, and this is something you get a feeling for when you listen to the earnings calls and go through old transcripts. Go to glassdoor.com and give me the ratings of the company and the management. And then finally, you want to search the internet very thoroughly to try to find any bad press about the company or the members of the management team. Are there any lawsuits going on against the company or members of the management team personally? How about in the past? So we're trying to find out if the management team is honest, if they've had some trouble with the SEC, or if they had trouble in past companies like shareholders lawsuits or something like that. We want to dig this up, which would take us a lot of time, but Grok is pretty quick, so let's run this prompt. All right, here we have it, the summary of the proxy statement, base salary, cash bonuses, equity awards. Jayshree Ulal is the president and CEO, and we can see the other people in the management team here. Former chief financial officers. Okay, they just had a change in that. Well, in November of 2023. SVP software engineering, COO, and the chief platform officer. Okay, this is very nice. We can see the overview, base salary, bonus, and stock award. So we can see the stock award is by far the biggest part of the total compensation. So their base salary is not really high, so they're relying on the stock awards. But we have to see what the stock awards are connected to, what affects the amount. So you have base salary that's set to be competitive and benchmarked against Cisco, Juniper, and Palo Alto. A lot of the times, their companies are going to have really high base salary and they're benchmarked against peers, but the peers are some other companies in other industries. So this is something that we have to look at if they're benchmarking it against real peers or just naming some companies to be able to pay themselves outrageous salaries. Annual cash bonuses, that's based on company performance, key metrics, revenue growth, operating income, and individual performance evaluated by the compensation committee based on leadership, strategic execution, and contribution to corporate goals. Market share gains, which is good, AI networking, leadership. Okay, then we have the RSU and PSU detailed, they're vesting over 4 to 5 years. And this is something we would just go into the proxy statement for Arista networks and just check on some of the details to make sure that Grok is getting everything right. But the PSU is performance-based, vesting based on total shareholder return relative to the S&P over 3 years, which is pretty good. In 3 years, usually the stock price will go hand to hand in most cases with free cash flow growth. So based on the proxy statement, compensation philosophy and governance, 90% of CEO compensation is variable with bonuses and equity and ensures alignment with shareholder outcomes. And they are comparing it to peers like Cisco, F5 Networks, and VMware to ensure competitiveness. They have a clawback policy which allows recovery of incentives in case of restatements or misconduct. And they have stock ownership guidelines, which is good to see. They must hold 5x for the CEO or 3x for the other people in the C-suite, based base salary in stock, ensuring skin in the game. And say on page in 2023, shareholder vote approved executive compensation with 95% support, indicating strong alignment. And we can see the breakdown here, where the CEO has 0.64% of the company, but her stock is valued at 168 million, which is a lot. And we can see the industry experience and tenure with the company. So everybody except the CFO has a long tenure with the company, and they do have a lot of skin in the game. We can see the co-founder Andreas Bechtolsheim, or how you pronounce that, has 3.6 billion in the company, 14%, and the co-founder here, still Kenneth Duda, is still working in the company and has shares worth 126 million. So a lot of skin in the game, and we just got all of these details by doing one simple prompt. Now the M&A history is not long, and according to Grok, it has all made a positive impact, but the deal value is very low compared to the size of the company. So that's also good to see that the company is not wasting the shareholders' money on useless acquisition. And finally, Grok has the management predictions for us, so we can see that the track record for the management team is pretty good, where they are delivering on most predictions with some minor shortfalls. When it comes to excuses, they're very rare, and the management team is acknowledging challenges but is focusing on execution. And Grok mentions here that Ulalal's transparency in earnings call enhances the credibility. And they have a strong follow-through with consistent delivery on product innovation, market expansion, and profitability. Oh yeah, that was actually not the last thing in part 3. We still have Glassdoor and the bad press and lawsuits. The Glassdoor rating, you can see Grok makes a pretty good summary for us, where the rating is very good for the company. It goes into specific ratings, pros and cons. This is very good to read through to try to figure out how the culture is within the company, and it's looking pretty good. And then we have bad press and lawsuit. Bad press about the company is mainly in their Bangalore office, nothing specific here. Bad press about management. Andreas Bechtolsheim, which is one of the founders, um, got apparently into some trouble with the SEC over insider trading allegations tied to the IPO in 2014. That is something that's good to know beforehand if the management team has been getting into some kind of trouble, but no notable press for the other executives. Current lawsuits, there are no active lawsuits, but there are some past lawsuits which they settled in 2018 against Cisco for patent and copyright infringement. And then there was another lawsuit which Arista won in 2016, no damages paid. So a lot of information pulled together for us in a very short time. So for the final part, I want to summarize the write-ups that I can find about the company on Value Investors Club and on Join Yellow Brick. I want to try to find any short theses that are online, and I want to end it by creating my own short thesis. So we just go to Value Investors Club. Everybody can get the information from there. You can just have to create a login, and I think you can get write-ups. The latest write-ups, I think, are probably 90 days old, something like that. So you can get a lot of value from there. I just copy pasted the article or the write-up from Value Investors Club, which is actually a short. It's very old, 2015, but there might be some things in there that still apply to the company. Then I found a good write-up on Join Yellowbrick, and I just copy that link into the prompt. Um, and I asked Grok to find the short thesis, to summarize them and give me the link. And I also want a detailed summary of the latest earnings report for the company, and especially the Q&A, and I want to have that, and I want to collect those while I'm researching the company. So every quarter I'm going to be updating those and going through all of them, which will make this analysis more thorough and more useful over time. Because like I said, you never know how long you're going to be following the company before you can actually buy in. And still after you buy in, you want to keep all of the information up to date. And finally, based on all of the above, let's create our own short thesis. Okay, let's put this into Grok. Okay, here he is with a summary of the short from 2015. We don't want to go into too much detail about that, but I would definitely read over it and also go into Value Investors Club and just read the comments. They're very insightful. Um, Competitive pressure and Cisco dominance and the lawsuit against Cisco were the problems back then, which have since been settled, and they've actually, like we've seen, they've taken a lot of market share from Cisco, and while Cisco is going down, Arista just keeps growing their market share. So this one doesn't really apply now, except for maybe valuation concerns. But in my opinion, for a high quality company like Arista, I don't think they have a lot of valuation concerns, at least at the moment. But customer concentration is definitely still a problem. So that is something we have to take into account. And we can see the summary of the article from Yellowbrick here. We go through that. It's basically saying the same thing that Grok has been saying while going through all the details, but you might pick up some new nuggets or information about the company that's important in your decision making. So it's good to go over this thoroughly and just to read the actual article. That's always good, but this is good for coming back to. You don't want to spend all of this time again and again reading the same articles. So having a good summary is good for you when you have to make a quick decision when the price has maybe dropped. Grok did find another seeking alpha short thesis. I don't really pay a lot of attention to seeking alpha, but I would definitely read it to see if it has any merit. And we could also go over the summary, which is overvaluation, customer concentration, competitive threat, margin pressures, macroeconomic risks, and technical risk. Here, Grok has made a detailed summary of the latest earnings report, and this section would just be getting bigger as we add to it when we get the latest reports. You can see the financials here, and the Q&A session highlights. It's really nice to have this summarized so you can quickly run over it when you're making decisions. And then we have our formulated short thesis for Arista based on all of the information gathered in this deep dive. And this is something we definitely have to go over before making the decision to pull the trigger or not. Like we have touched on a couple of times, customer concentration risk, intensifying competition in AI and cloud networking, NVIDIA open source Sonic, which is from the short report from Seeking Alpha in 2023, Cisco and Broadcom. Overvaluation, high expectations, margin compression risks, macroeconomics and cloud spending volatility, limited AI revenue contribution, regulatory and geopolitical risks. That is something we'd probably have to dive into, what the Trump tariffs, what kind of effects we could see on Arista from the Trump tariffs. That is an extension of the part 4 prompt that I would add into it. Go specifically into the supply chain for Arista and what are the risks with the new tariffs. That is something that I just thought of to add to part 4. So in just about an hour or so, we have a very detailed deep dive on Arista Network. And I knew very little about the company this morning, But now, after going through all of this and reading through it, I actually know a lot about the company. But you have to be a little bit patient with the prompts. You have to add to the prompts, make more details. Don't try to do too much at once. And try to keep it simple in the beginning and then keep on adding to it, keep adding more parts. By the time you have defined your prompts and they're split up into different parts, whether it's 4 parts or 10 parts, you're going to be very quick when you want to make a detailed stock analysis on any company. So I hope that was some value for you guys. I just want to ask you, if you liked the video, to like it and subscribe to the channel. And I will see you on the next one.